It is market update time once again, and this month we're going to be sharing insights in how the house market here in Brisbane has slowed down, the rate of growth has stagnated, and yet the unit and townhouse market has continued to grow. All of the information that you need to make an informed decision about buying in Brisbane will be in this episode. We hope you enjoy it.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi everyone, and welcome to a market update with the Brisbane Property Podcast, February 2025 market update.
It is already March, of course. We are reporting on the February data, so we hope you get lots of value in this episode. Obviously, we're going to talk through what's happened in both segments of the market, the house market, the unit market, but also what's happening in that rental market space as well. So get your pens and paper out for those that love the data. We've got plenty of it in this episode.
And just straight off the top, median dwelling value in Brisbane, 0.2% over the month. Slight slowdown from January, which was 0.3% rise.
Yeah, this is the similar trend that we've been seeing now month on month, a slight slowdown in that rate of growth, but the rate of growth is still positive. Quarterly growth now for all dwellings in Brisbane is sitting at 0.9%. And last month, that is at the end of January, that was sitting at 1.2%. So it is a slowdown, but buyers need to know that the market is still growing month on month.
And around Australia, Brisbane still remains obviously a very strong capital city in the markets in Australia.
Look, it does. When we're looking at the annual growth rates, Brisbane is still one of the top three markets around the country. However, when we're now breaking it down into that monthly data, we can see that Brisbane slowed right down, and other markets, including both Sydney and Melbourne, have actually picked up. Whether this is just a monthly one-off trend or whether it is the start of a longer-term adjustment, it's too early to tell, of course, and monthly data can obviously be influenced by what has transacted. So it's definitely something that we've started to see in the market, and we're going to be monitoring that over the next few months.
I know that when we talked a while ago, and I'm probably going back a couple of years now, and we said watch the unit space. The unit market has still, again, even in the last month's data, it's outperformed the housing market.
Look, this has been something we've talked about in every monthly market update now for over 2 years. The unit market has outperformed the house market on a monthly, quarterly and annual basis here in Brisbane for some time now. A lot of that is driven by affordability. It is a more affordable segment of the market. And of course, off the back of COVID, we definitely saw some people look for more space, which meant people were willing to make a compromise on where they lived and moved a lot further away from the CBD. However, post-COVID, we're now starting to see people move back in towards the more central locations. We're also starting to see people make lifestyle preferences over property size preferences. They're compromising on the type of property that they're willing to live in and moving back into those inner city locations. And that's obviously been putting demand on that unit and townhouse segment of the market. And that's why we've seen that shift and that outperformance in the last couple of years across Brisbane in that higher density space.
We've also talked about this a little bit in the past about the unit market side of things, and obviously with construction and all the pressure on those side of things, they're just not building as many units. I know we've talked about this in the past in some podcasts as well, but again, just keep watching that unit market, I think, because there's no new, the big ones that they're building, or the units they're building, as we've said previously, are those higher end River City side apartments, much, much higher price point.
Yep.
That takes away that affordability side of it, which you mentioned a little while ago. So I think that unit market side of things is still, I still think it's got some legs to go on it.
Look, it wouldn't surprise me if we still see prices in that segment continue to escalate. And we're going to break down where current median values are sitting and how that compares to the current first home buyer incentives. But for first home buyers in Brisbane, there are incentives up to a purchase price of $700,000. So anything under that price point, which largely attracts a unit or townhouse buyer across most of the city, it is going to have a stronger cohort of demand because those first home buyers are also likely to be competing in that market. Not all first home buyers are shopping under that budget. I acknowledge that, but because of those incentives available, that does actually attract a higher volume of buyers a lot of the time.
Let's just run through some of the segments. I know we do this one as well, where we look at different segments of the markets on how they've performed.
Yeah, look, Very different performance across different segments of the market. So the lowest quartile of the Brisbane market is the quartile or segment that's performing the best. 2.2% growth in the lowest 25% of property values for all dwellings that transacted across Brisbane over the 3 months to the end of January. So compare that to the top 25% of property values, or the top quartile, where the quarterly growth rate was 0.4%. So quite a big difference between the more expensive properties, which are still growing, but they're growing at a slower rate of growth, compared to the more affordable markets, which are still growing but at a faster growth rate. And again, not to be dismissed is the fact that units and townhouses largely make up a larger section of that affordable end of the market, compared to houses, which largely now tip into the top end.
Just as a bit of an example, but for some people, when we talk about these different segments of the market, a sale recently in Ascot, 5.8 mil.
That was at auction, that sale. And the reason that it's good to make comment on that is that top end of the market is still performing well. Now, above that, we've got a prestige market. Very, very strong performance in that segment of the market. Of course, very few properties transact over that $10 million price point here in Brisbane. However, there are a strong depth of buyers in that segment of the market. There's just a lack of supply. So, we are talking to agents who consistently tell us that if they had the properties to sell, they'd have the buyers to actually sell them too. So that prestige market in Brisbane seems to be extremely strong. But when we're talking the top segment of the market, the top 25% of property values here in Brisbane, that's at a price point that's only just above $1.5 million. So still a market that there's a lot of buyer depth within.
And just very quickly on that is a very, very competitive part of the market. So again, another sale we've got here just in Kedron on the north side as well. Went to auction, 15 registered bidders, and that property actually sold for 1.5.
Yeah, it's interesting because, we've seen properties that have gone to multiple offer with in excess of 15 offers as well. Now, a lot of this does vary depending on where the property is located and the property type. But I guess the point we're making is that when you're out on the ground and you're seeing the buyer depth based on the number of people turning up to these properties, you're getting an understanding of how much competition there is. And in areas where there's high competition because of high demand, you're going to see that continued price escalation. Now, we can break down Brisbane by suburb or by region or small government segment area, or SA2 area, or SA4 area. So there's so many ways to break down Brisbane. What we will find is within each segment of the market, we're seeing slightly different performance elements. So being out and about, being on the ground, especially if you are a buyer, is the best way to determine who else is in the market shopping for the type of property that you're looking for. Because if there's a lot of buyers turning up at open homes, it's going to be more competitive. It's likely you're still going to be seeing price growth happening.
It's interesting when we talk about different segments of the market and then we talk about different suburbs, and they definitely don't all perform the same.
Absolutely not.
So there's such a big difference on it, and yet you can actually see, and I know again we're talking because we're combining a little bit on the ground experience, which we obviously, the team from Streamline Property Buyers is out and about on the weekend, weekdays, weekends, and looking at properties, and you can get some suburbs which might have had negative growth over the last month, but you go to an open home, and Melinda, you were at one on the weekend. I think it had something like 50 or 60 groups through it.
Yeah, there were 60 groups at the first open home for a townhouse in Wilston, just 4 kilometres to the north of the CBD. And as you've rightly pointed out, sometimes that doesn't always coincide with what the data might be telling us. For example, CoreLogic have put out some quarterly growth rates at a suburb level, and it shows that Wilston is one of the suburbs that's had negative growth, negative 4.1% over the last quarter, including other suburbs such as Hendra, Robertson, Wooloowin, McGregor, West End, Eagleby. Let me just backtrack. Some other suburbs that have had some negative growth reported include Hendra, Robertson, Wooloowin and Wilston, and suburbs that have experienced some positive growth according to these data sets include McGregor, West End and Eagleby. Now, the thing that we need to keep in mind is that when you're looking at a suburb level or suburb level information, you're looking at a very small volume of transactions. And so when we look at property data, we look at the median value. That is the middle score. So if we see within a 3-month period only 20 properties in a suburb transacting, it may not be representative of all properties that actually are for sale or potentially sit within a suburb. If you're seeing more affordable suburbs sell over the Christmas New Year period because the prestige properties or the better quality properties are certainly not going to be listed at a time where it's not peak demand, then you're going to see these price shifts happening in the data, but it doesn't actually reflect the true value of what is transacting on the ground. And that's why it is so important not to rely purely on the data, but to understand what that data is being made up of.
Yeah, again, we're in Wilson. I'm not overly concerned about that negative sort of data there. I know how many people want to buy in the area. We know the area really well, and we know how popular it is as well. We know how much, as you said, how many properties transact within that area as well.
Yeah, so the information I've just shared relates to house data. We can look at suburb level information for units as well. And CoreLogic is showing Ashgrove, Brisbane City and Kangaroo Point have all experienced some really strong growth over the last 3 months, but declines have been experienced in Taringa, Sherwood and Denogra. Now, these suburbs are actually all fairly well clustered together in the inner or middle ring locations of Brisbane. So a lot of this is caused by compositional bias of what has sold in these locations that causes a suburb level shift in those data points. It's very unlikely to be a true reflection of every property moving up or down in those suburbs.
We did do a very short update from post
earlier in the week.
Tropical Cyclone Alfred. And just to give people an update, if you didn't catch that at all, obviously Brisbane was pretty much spared, I think. Gold Coast, northern New South Wales probably felt more of the impact of the cyclone. We obviously had a bit of wet weather on the Sunday. That was probably our main day, where low-lying areas did get a bit of flooding. Some areas lost a little bit of power, not all areas. So I think Brisbane was pretty much spared. A lot of people down south were probably looking at updates and weather, and it was probably a little bit dramatised, if you want to call it that, in some areas. Yes, I do understand that some areas did cop it a little bit more than others. But yeah, I think Brisbane in all fared pretty well. And obviously those low-lying areas were flood affected.
Yeah, and let's not forget in February, we saw the very first rate cut for many months here in Australia. And I think that injects renewed confidence into the market, especially as the uncertainty around Cyclone Alfred passes here in Brisbane. We're going to see those rate cuts come through as renewed buyer interest. Obviously, with rate cuts, people have more capacity to borrow, and it improves consumer confidence as well. So that's actually something that could have a positive impact on demand at a time where supply is still constrained. That is, there's still a low volume of properties available for sale, according to those SQM listing numbers. It's still a low supply environment, about 30% down on our long-term average here in Brisbane.
Yeah, listings are very, very tight. There's not much change on that. And as construction, that side of things, obviously that's slowing things down, having an impact obviously on that demand side. So we're still sitting on very, very tight and very low numbers on listings. But yeah, as we've talked about and we've mentioned before a little bit, in the right areas, in certain areas, the demand is still very, very high for property.
And look, clearance rates throughout February actually softened compared to January. And what we just experienced in the early weeks of March is that the clearance rate is actually picking up once again. So it's good to understand those auction clearance rates, although we've talked previously about the fact that auction clearance rates are not always an indicator of market performance, because we have seen by being out on the ground in many instances, there's many cases where there's a high volume of registered bidders at auctions. However, the sellers don't meet the expectations of the market. That means the property passes despite the fact that there's really strong buyer depth and buyer volume. So that's more of a seller sentiment issue rather than a buyer issue. When you've got multiple registered bidders, and they bid up to a certain amount, generally, if the property doesn't transact, it's because the seller's not willing to meet the market. So those clearance rates are not always representative of what's going on from the buyer's perspective. It's actually a combination of both buyer and seller. So
dwelling values. Brisbane, Greater Brisbane, dwelling values reached 894,425, the median price. It was a monthly increase of 0.2%. Quarterly increase of 0.9% and an annual increase of 9.7%.
And the CoreLogic data showed rebounds in Sydney and Melbourne as a comparison for the month. In Sydney, they were up 0.3% and Melbourne up 0.4%. So slightly stronger monthly performance in both of those cities compared to Brisbane. However, we do expect this to be a blip in the radar, and Brisbane's strong ongoing performance will continue to shine throughout the latter months of the year as we move throughout 2025.
And PropTrack on that side of things also reported a minor increase of 0.29% for Brisbane dwelling values.
Now, of course, we don't always like talking in dwelling values because it can actually, construe some of the data. We prefer to break it down into house and unit values. So let's do that now, if we may. House values, Scott.
So house values, we saw no monthly change actually in the house values. We saw a quarterly change of growth of 0.7%, annual increase of 8.6%. So a little bit of a slowdown from January's 0.3% increase, and that left the median house value at $977,381.
So no change in house values, median house values across Greater Brisbane throughout February. So that market has stagnated according to the data. PropTrack actually reported something slightly different in that there was a small price increase or median value increase in the house market here in Brisbane. So we'll be watching closely to see what happens next month with the data. From our on-the-ground perspective, we're certainly seeing some pockets have stagnated, absolutely, but we're also seeing other pockets where prices do continue to escalate, especially for those scarce products in premium locations. There's still very strong demand in that segment of the market. Again, not always reflected in a median value because those higher value properties are typically at the top end and therefore excluded from that middle score. So we're not seeing those trends occur within the data simply because of the way a median trend is calculated.
And not surprising to everyone, the Brisbane unit market's outperformed houses again. It's been a while since we've said something different to that. So a 0.7% increase on the median unit value in February. It's obviously been very strong, as we keep saying, quarterly gain of 2% and an annual increase of 15.2%. And that's seen the median value for a unit at $690,650.
So let's just backtrack. The median change in house values across Brisbane over the last 12 months was 8.6%. The median change in unit and townhouse values in the same period was 15.2%. So you can really see the difference in growth performance between those two segments of the market. Now, also, yields in the house market sitting at 3.5% gross, in the unit and townhouse market sitting at 4.5%. So a better gross yield potential in the higher density segment of the market as well. Of course, investors are interested in net yield, and we need to account for any costs associated with holding properties to calculate what that would look like. But a median value of $690,650 for a unit feels like it would have been unheard of 3 years ago here in Brisbane. It really has escalated that rapidly. These numbers as a median value still sit below that threshold for first home buyers to qualify for those stamp duty concessions. And again, I think this is why a big part of the market demand in this price point is coming from those first home buyers. But I think we've also seen some strong investment interest in this segment of the market as well, Scott.
PropTrack on the unit, obviously a minor increase of 0.31% for February as well.
So the same positive price growth trend there here. The rental market, it's been pretty tight. Vacancy rates across Brisbane dropped quite significantly in February to 0.8%. So we've dropped below that 1% threshold where we've been sitting for many months. It did elevate slightly over that Christmas period, which is a seasonal adjustment, which happens every single year. So we were at 1.2% in January. It's dropped to 0.8%. So very little to rent. One would assume with vacancy rates this tight, that rents would still be skyrocketing because of low supply. However, in many areas, there have been affordability caps that are preventing further price increases. So house rents are now falling actually on an annual basis across many of the inner city locations across Brisbane. Whereas what we're finding is unit rents continue to escalate and increase in many of these suburbs. Now, this is really important for property investors to understand because it suggests one of the reasons affordability constraints may be limiting further rental increases in some locations across the city. So if you're not getting an understanding of the demographic of who lives in a particular location if you are a property investor, to understand how much of their take-home income is being paid towards rent, then you're making a big mistake. It is so important to understand the demographic, to understand that the rental property that you're buying is going to be affordable for someone that's paying rent in that area, and it's going to be long-term sustainable affordability.
Yeah, I think be smart where you buy when you're looking at investment properties as well.
100%.
Bit of a summary.
Yeah, look, I think that without a doubt, February has seen a little bit of a slowdown in that rate of growth in Brisbane, especially in the house market. The unit market is still performing very well. And I would say that that's consistent with what we're seeing on the ground, except for some of those higher end properties which continue to attract strong buyer demand, especially for that finished product where there's nothing to do. It's move in ready. The interest rate cut, in my opinion, is expected to boost buyer confidence, and it's likely that we might see more confidence come throughout the year as interest rates potentially are cut again further in the year. That obviously has a very positive effect on sentiment and also improves borrowing capacity, meaning people can actually afford to pay more for a property when interest rates are lower because they have the ability to borrow slightly more.
Investors obviously remain strong, so 40% in new finance commitments from investors. Looking ahead, infrastructure, I know decisions have been made. Haven't got the release of all the information yet, but decisions have been made regarding the 2032 Olympic venues and how Brisbane will shape up.
We will bring this to you on an episode soon once the official announcements do come out, but we have to remain tight-lipped for now.
I've got some inside info, but I can't share that at the moment. Hopefully, from what I've heard, it does sound really, really exciting and promising for Brisbane. Let's hope that actually happens. But yeah, look, it still remains solid. We're stable, we're solid. I think there's the economic side of it. Everything looks great for Brisbane. So it's been a great month. Yes, we got hit by a bit of a storm, but we're pretty strong up here, and everyone bounces back. We've done it before. We'll do it again. And yeah, look, I think the Brisbane market there's a lot of demand out there and still a lack of supply. That's pretty much my summary on it.
That's pretty much the fundamentals as we see it. It's also what the data is showing us. But I would encourage anyone, instead of relying purely on data that is available on major real estate portals or through some of these data houses, get out on the ground and have a look for yourself. See what's happening in real time. That is going to give you the best level of confidence to make a decision to buy or to hold based on how many other buyers might be in the market for the type of property that you're looking to buy in the location that you are targeting.
Yeah, and if anyone's out there interested in property, wanting to buy a property, a house, an investment property, and you need professional help, reach out to the team at Streamline Property Buyers. It's free to talk.
That's so true.
So, okay, thank you very much. Hope you enjoyed that market update. As usual, the normal spiel from myself. I will let Melinda wrap things up, and it's been good talking, and we'll talk again next week. Thanks very much for listening, and bye for now.
Thank you once again for joining us on the Brisbane Property Podcast. We hope you have enjoyed this episode. I certainly love the data episodes where we can share our insights with you. As always, we would love for you to share this episode with friends and family. Don't forget to subscribe and also leave us a review if you enjoy our content. It does help other people to find this episode. We look forward to speaking with you again next week. Until then, bye for now.